But if you want to break the will of all the last remaining bulls, and there's not a lot out there, honestly, they've been really getting crushed with these pop and drops. But if you want to do it, you need to at least take out the 15.7 low.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
Here's the S&P 500 or the spider's chart. This is the daily chart of the SPY. Now, I've put some trend lines on this chart, but before we go into that, let's flip over to the intraday. Now, the intraday chart basically shows us what's going on pre-market. So what we can see is that yesterday we sold off. We closed right down here. Let me get my drawing tool up so I can draw for you guys. All right, so yesterday we closed right here. In the after hours, we were up a little bit yesterday after the close. This morning, we've been trending up into that number, and then when that number came out, we popped up here. Now, again, we're not up a tremendous amount. It's not like a massive move to the upside, but nonetheless, the markets are higher going into the open. Now, the question is this sustainable, and how high can the S&P 500 go, or the SPY? And for that, what we want to do is we want to flip back to the daily chart. All right, now, looking at the daily chart, we put in some really cool trend lines, or I put in some really cool trend lines. If we zoom out here, look at this. You go all the way back to COVID lows down here. You have a pivot low. You connect it through this low, and it goes right through this top right here, and that gives us that low right here. Now, if we take this low and we connect it right through this low and this low and this low, we also get that. So that gives us a base point of why the market bounced recently when we sold off into that level. Now, if we zoom in a little bit on this chart here, right? If we look at the all-time high on the S&P up here, we can now connect it to this recent high. Now, for me, as a technician and seeing that the markets are up, it makes me think that there's probably a level we're going to here. There's a gap right in here, all right? And if we put a gap fill trend line right there, and we have this downsloping trend line, that probably gives us our upside target for where this market may go today. Not necessarily all today, because that would be a really big move for today, but into early next week. All right, so what we're looking at here, guys, again, if we look at the chart, this gives us an approximation of a target. And I'm going to zoom in so you guys can actually see this, right? So here's the gap right here. This is the gap. Here's your downsloping trend line. So again, just zooming in, I'm just going to do my best to draw this here, right? So this is your area right here. We're talking about 457 to 458. Anywhere in this vicinity, I would say right in this area is your zone for where the S&P is likely going to go. So there is some upside here. There's no doubt about it. I am curious, by the way, and I will say this. There is a small chance, okay, and this is a tough one to make a call because the futures are already up, but there's a small chance that the S&P 500 could reverse some of those early gains because the unemployment rate went up, not because the economy's weakening, but because participation is moving in. So it's really not like a lot of bulls will tell you, oh, the unemployment rate jumped to 3.8%. That shows us the economy's weakening. It's not really that simple. So it's not like a slam dunk for no more rate hikes. It's kind of this in-between area. And I think, again, I'm curious to see throughout the course of the day how the markets behave. Now, one thing to keep in mind for those of you that are stock market people and also for crypto people, the stock market is closed on Monday for the Labor Day holiday weekend. So generally, and I've traded for 24 years, generally when markets are going into a 3-day weekend, they tend to float higher. It's somewhat unusual to see a sell-off pre-holiday. So just be aware of that. That partially has to do with the light volume, partially has to do with the algos that want the market bid up. The government wants the market bid up, so people spend money going into a holiday with all those Labor Day holiday sales. Okay, so let's talk a little bit more here about what we got going on in the markets. I want to show a couple different charts. The first thing, and I talked about this yesterday, the first thing I do anytime I get big news out in the morning, I take a look at what the dollar is doing. What is the US dollar doing? Because remember, if the Fed is not going to hike anymore and start cutting, the dollar should decline. All right, if the Fed is going to continue hiking, the dollar probably goes up. It strengthens the dollar. the more that interest rate goes up, the more money wants to be in dollars, the more demand, the price of the dollar goes up. So what we see here is initially on the reaction, we had this massive fall in the dollar, but we have bounced back a little bit, and that tempers the gains a little bit. It means that essentially we're not going to, as of now, if the dollar stays here, we're not going to have a runaway massive move up in the markets. It's more going to be muted. We're going to move to charts of crypto. Now, cryptocurrency, guys, this has been a wild move in the markets, and every time I see this, it just reminds me that we are still in a bear market in crypto. Now, people made fun of me saying it was still a bear market. That's fine. That's part of the job. But what I want to show you is that when you have good news in crypto and the gains go away within a day or two, that is never a good thing. So let's talk quickly about this, right? What do we have here? So if we look at this chart, we can clearly see this was your BlackRock news with a big pop. This was your Ripple news that they won their SEC case, right? And look at how it popped, and then the reversal occurred a day later. That's not good. And I even commented, this is what's called a reversal candle. And a reversal candle is never a good thing in a chart when it's at the high end of the range. All right, so what did we do? We trailed off. We then had this dump out. Then right down here, we had the grayscale news just a couple days ago. We had a pop, and then 2 days later, we're back down. That's the classic hallmarks of a bear market. What it's doing is psychologically, it's killing off all the bulls. You get a bunch of bulls here to buy in, okay? And then here, even more bulls buying in, and those bulls are made a fool, essentially putting out of the money. Now, once we got down here, which basically was the start of this move, then these bulls that bought in are like, what the heck, man? I thought this was going to be the new bull market. They get wiped out. Then you get another green pop, which gets more people to go bullish, and they get wiped out as well. And that's the hallmarks of a bear market. All right, it just is what it is. The bear markets, the job of the bear market, and this is a bear market in commodities, in stocks, in crypto, any asset, real estate is included there. A job of a bear market is to break the will of all of the bulls. And when it breaks everyone's will, that's when you get a bottom, all right? All right, but just a reminder here, looking at this chart, I'm still in the camp that we have to test 25,000, right? 25 is right here. We haven't quite hit that level yet. We've come close. Then I think you have to test this, and at least, and I think you could even go lower, but if you want to break the will of all the last remaining bulls, and there's not a lot out there, honestly, you know, they've been really getting crushed with these pop and drops. But if you want to do it, you need to at least take out the 15.7 low, 15.6 low, because that could be capitulatory. And we get to my first high target of 12 to 13,000, maybe 10 to 9. I don't know if we'll get to 10 to 9 because I think the spot ETF will be approved at some point and that will bring institutional money in. But I think in the very least, you probably have to go test and maybe pierce this low. All right, so that's a little update on that front, guys. Just a couple things here to go over. If we look at gold, gold is rallying again today, guys, and I've been pounding in this game plan. I've been telling you guys again, this is a buying opportunity. When we were right here, key support, retrace to the scene of the crime. We had to test it again. Now we're off to the races. You'll have a little bit of resistance around 1980, but my guess again is if we look at the bigger picture, and I went over the bigger chart patterns here, the bigger picture continues to show that we have this scenario where there's a bullish pattern building in gold. All right, bullish pattern meaning a big up move like this, and then this is all consolidation, right? All of this is consolidation. You're digesting this move for a move up. If you go back to the 1970s and 1980s, this exact pattern is there. And you can look at the inflation and track the inflation, and it mirrors what we're seeing today. And what we saw was gold eventually broke out and actually went up 9x. Now, I don't think we're going up 9x in gold from here. I'll tell you that. I think a 2x or a 3x in the next 3 to 5 years is possible, but a 9x probably not. But I do think that this is an underestimated asset that hasn't performed equal to the stock market. And once we get in a market where the stock market struggles for a long period of time and inflation remains elevated at 3% or more, you likely are going to see more upside in gold. It is going to be the go-to asset along with eventually Bitcoin. Eventually Bitcoin's heading a lot higher. It just needs to get through this growing pain period here with regulation, with adoption, with all these other things out there as well.